What does the watch market collapse mean for the gray market? If you don't already know who I am, my name is Roman Sharf. I've been a gray market watch dealer for over 20 years. So let's jump into this video. The luxury watch market has seen unprecedented highs in the recent years. Over the last year, prices have pretty much stabilized, and some people are calling it a collapse because they stabilized at a much lower number during the COVID highs, right? Collapse is a bit strong. I would say a correction is what took place last 2 years.
The prices are falling. The luxury watch crash is unfolding faster than anyone predicted, and the worst is yet to come. In 2025, it's looking more like a financial trap. The luxury watch market is free falling, and it's dragging collectors down with it. Join us as we unravel the truth behind the sudden collapse, expose the hidden risks of high-end timepiece investments, the economy's effect on luxury watches. The global luxury market was optimistic that 2025 would see a strong rebound, but those expectations are dwindling due to a new trade conflict initiated by the U.S. President Donald Trump. The U.S. and China are two major markets for luxury items like handbags and watches, have begun to increase taxes, tariffs, on each other's imports once more. This ongoing exchange is causing anxiety among people in both nations regarding the economy. As a result, experts have revised their forecasts for the luxury sector. Instead of a 5% growth in 2025, it is now anticipated to decline by 2%. Some analysts think the industry might not bounce back until 2026. Although there was a brief pause in tariffs for certain tech companies, the U.S. government swiftly imposed new duties on electronics. This constant back and forth complicates business planning. Luxury powerhouse LVMH, which owns brands like Louis Vuitton, led by billionaire Bernard Arnault, had a meeting with Trump in March to talk about tariffs. Earlier this year, he had expressed optimism about the U.S. economy after Trump regained power. Nevertheless, Barclays predicts that sales in LVMH's primary fashion and leather division will drop by 1% in the first quarter of 2025. Overall sales for the company are expected to remain unchanged. Analyst Luca Solsa mentioned that even though Trump recently suspended some tariffs for 90 days for countries willing to negotiate, the impact of previous trade decisions is significant. Currently, the luxury industry is facing challenges. Middle-class consumers are cutting back on spending, and China's economy is struggling. Trump's trade war is not helping the situation. The U.S. has increased tariffs on Chinese goods to 145%, while China has retaliated with 125% tariffs on American products. France, Italy, and Switzerland, where most luxury items are produced, are also dealing with U.S. tariffs, although they are lower at 10%. Recently, interest rates have increased. This means that borrowing money has become more costly for individuals, whether through loans or credit cards. During times of economic growth, the luxury watch market usually sees strong expansion. This growth is mainly fueled by two important factors. As economies flourish, consumers have more disposable income to spend on luxury items. Economic growth often brings about a new group of high-income consumers, especially in developing markets, who are excited to show off their new wealth through luxury items like expensive watches. Historical evidence backs this trend. From 1997 to 2019, the main personal luxury goods market, which includes luxury watches, expanded at an average rate of 6.3% annually, double the rate of global GDP. This difference in growth rates highlights how the luxury sector can surpass the overall economy during times of growth. However, when economic troubles arise, the luxury watch market encounters a distinct set of challenges. As economic uncertainty increases, consumers often become more careful with their spending. This change in behavior can lead to a notable decrease in the demand for luxury watches. For example, Swiss watch exports fell by 16.1% year-on-year through March 2024, showing a significant drop in consumer interest during tough economic times. The drop in demand frequently leads to an oversupply issue. Retailers and dealers struggle to sell their current stock, resulting in excess inventory. This was clear after the recent economic downturn, as dealer inventories of sought-after watches watch brands like Rolex, Patek Philippe, and Audemars Piguet rose significantly. The secondary market for luxury watches is especially vulnerable to economic downturns. Prices for second-hand luxury watches can fall significantly, with some models seeing huge drops in value. For instance, the Watch Chart's overall market index fell by about 40% from its peak in 2022, showing just how serious the market correction is. To deal with these tough times, luxury watch brands often have to change their pricing strategies. Some brands might choose to raise prices to keep their profit margins, while others could introduce more affordable models to reach a wider audience. For example, Rolex and Patek Philippe were said to be thinking about raising prices in 2021 to make retail prices more in line with market prices. It's important to point out that not every part of the luxury watch market is hit the same way by economic downturns. Watches that cost less than $1,000 usually hold their value better compared to the ultra-high-end ones. This stability in the lower price range indicates that consumer behavior differs across various segments of the luxury watch market during economic changes. The luxury watch market has proven its ability to navigate economic fluctuations effectively, even during challenging periods such as a worldwide recession or a decline in consumer spending. Watch manufacturers typically discover clever strategies to adapt. For instance, they may concentrate more on affluent collectors, exclusive editions, or new markets when sales decline in other areas. When the economy is thriving, the industry capitalizes by introducing new models, increasing store locations, or elevating prices. This adaptability allows luxury watch brands to remain appealing and valuable over time, regardless of the economic conditions. What is really causing the drop in watch prices? The answer might shock even seasoned collectors. Stay tuned. Price decrease on luxury watches. Watchmakers such as Rolex, Patek Philippe, and Audemars Piguet struggled to produce enough to satisfy the demand. Consequently, many sought-after models became extremely difficult to find in stores. Due to this shortage, prices on the second-hand or secondary sightings market soared. Buyers were ready to pay significantly more than the retail price just to acquire certain watches. Some models were being sold for 2 to 3 times their original retail price. For instance, a Rolex that typically retailed for $10,000 could fetch between $20,000 and $30,000 on the resale market. The combination of limited supply and high demand during the pandemic drove luxury watch prices to unprecedented levels. The thrill in the luxury watch market didn't stick around forever. The peak was hit on March 2022. Around that time, the Federal Reserve, which is America's central bank, began to increase interest rates to combat inflation. This made it pricier to borrow money, leading people to cut back on spending for luxury items like watches. Following that, the luxury watch market started to decline rapidly. Prices for watches from all the well-known brands began to drop. A tool known as the Watch Chart's overall market index, which monitors the prices of 60 popular watches from the top 10 luxury brands, indicates that the market has decreased by roughly 40% since its peak in 2022. This drop hasn't just been a quick slump, it has continued for 2 whole years. This indicates a significant and lasting shift in the watch market. What used to be a thriving market is now cooling off quickly, and buyers are becoming much more careful. The luxury watch market showcases the lasting charm of precise craftsmanship and timeless style. In 2022, this multi-billion-dollar industry was valued at a remarkable $28 billion, with expectations for steady growth. Analysts predict a compound annual growth rate, CAGR, of 4.6% from 2022 to 2030, emphasizing the sector's strength and ongoing attraction to discerning buyers around the globe. Leading this booming market is Rolex, which holds a significant 23.4% market share. Following this Swiss powerhouse are other esteemed brands like Omega, Cartier, and Patek Philippe, each securing their own notable segments of the luxury watch arena. The concentration of market influence among these elite brands highlights the significance of brand recognition and legacy in the luxury watch industry. Limited production runs create scarcity and boost demand. Certain models from brands like Rolex, Patek Philippe, and Audemars Piguet have experienced dramatic increases in value, often selling for much more than their original retail prices in the secondary market. The influence of brand image in the luxury watch sector is immense. Famous names like Rolex, Audemars Piguet, and Tag Heuer have developed a reputation for excellence that goes beyond just telling time. These brands symbolize status, serve as investment pieces, and are highly sought after by collectors and enthusiasts. This loyalty to brands and their perceived value enables luxury watchmakers to sustain high profit margins, with some estimates indicating margins of 20 to 40%, or even more for top brands. The impact of this decline is clearly visible throughout the luxury watch sector. A significant indicator is the steep decrease in Swiss watch exports. These exports are crucial since Swiss watches account for about 2/3 of all global spending on watches. From March 2023 to March 2024, the quantity of watches exported from Switzerland saw a significant reduction. The overall export value dropped by 16.1% compared to the same period the previous year. Even more notable, the number of wristwatches exported plummeted by an astonishing 25.4%. This indicates that not only are fewer watches being sold, but the watches that are sold are generating less revenue. This pattern isn't limited to Switzerland. It's occurring in all the key markets where luxury watches are typically sold. Countries that previously purchased a lot of high-end watches, such as the United States, China, and various European nations, are now buying significantly less. The entire global luxury watch market is under strain. Luxury watch exports have decreased in several countries. In the U.S., exports fell by 6.5%. Japan experienced a 3.5% decline in shipments. China faced the biggest hit, with a significant 41.5% drop in demand. Even though the overall market is struggling, some of the most well-known watch brands are still performing well in the resale secondary market. People are still ready to pay more than the original price for these high-end watches. Patek Philippe watches are selling for about 32.3% more than retail. Rolex watches are going for around 21.6% more. Audemars Piguet watches are priced about 15.4% above retail. This indicates that even during tough times, the most iconic and respected watch brands continue to be in high demand. The market isn't entirely weak, it's split. Some luxury watches are losing value, while others are still maintaining their worth. Currently, the luxury watch market is in a challenging position for anyone considering investing. There are significant issues that need to be addressed before the market can recover, like re-engaging buyers, especially in important countries like China and the US. Clearing out excess inventory that watch dealers haven't sold yet. Restoring trust in the concept of buying luxury watches as collectibles or investments. Until these issues are resolved, the market is likely to stay uncertain. In the luxury watch industry, the value of various currencies, such as the US dollar or the euro, in relation to the Swiss franc, CHF, is crucial for market dynamics. This is significant because most prestigious watch brands like Rolex and Patek Philippe are located in Switzerland and operate using Swiss francs. However, their watches are available globally in numerous currencies. Switzerland is recognized as the center of luxury watch production. Therefore, when the Swiss franc strengthens against other currencies, it can influence the entire luxury watch sector. For instance, if the US dollar weakens against the Swiss franc, it means that consumers in the US will have to spend more to purchase Swiss-made watches. This situation can result in decreased sales or reduced profits for Swiss brands. One of the first aspects to change when currency values fluctuate is the revenue of Swiss watch companies. If the US dollar weakens, Swiss watch brands could see a loss of around 10 to 12% of their revenue from the U.S. market. This is a significant blow to their earnings. To compensate for this decline, watch companies might increase their prices. In 2021, analysts predicted that Rolex and Patek Philippe would raise their prices to align more closely with the high prices that watches were already fetching on the resale market. These price adjustments assist the brands in maintaining profitability, even when exchange rates are not favorable. But amid the chaos, smart investors aren't backing out. They're analyzing. Want to know which watches are still worth the risk? Let's find out. Investment analytics for luxury watches. In the constantly changing world of luxury watch investments, being able to effectively track and understand pricing data is an essential skill. Although there are still challenges, the tools and strategies that investors can use are getting better, providing more clarity and understanding of this unique market. The charm of luxury watches goes beyond just their looks and craftsmanship. Many people see them as alternative investments that can increase in value over time. In the past, some luxury watch models have shown remarkable appreciation. For example, according to a post on Reddit, a Rolex GMT Master II that was bought for $3,000 2 decades ago could now be worth $13,000 in today's market. This significant rise in value has sparked interest in luxury watches as possible investment options. Additionally, luxury watches are often viewed as a safeguard against inflation. Much like precious metals, their physical presence and limited production can help maintain their value and even lead to appreciation, particularly for rare or discontinued models. On closer inspection, a more detailed view comes to light. The price-to-performance ratio of luxury watches often shows diminishing returns as prices increase. Discussions on Reddit suggest that the real advantages of high-end luxury watches usually don't justify their steep prices when you compare them to more budget-friendly alternatives. The luxury watch market can experience bubbles and corrections. A Forbes article pointed out that after reaching a peak in March 2022, the market saw a significant drop, with prices for major brands falling sharply. When thinking about luxury watches as investments, it's important to consider the ongoing costs that come with ownership. High-end watches, especially those with intricate movements, need regular maintenance and servicing. These expenses can add up and might reduce potential returns over time. Although luxury watches can increase in value, it might be a mistake to see them only as investment tools. The market is complicated and often influenced by factors beyond just their intrinsic value, like brand popularity and what collectors prefer. As one Reddit user wisely noted, investing in an index fund during the same time frame as buying a luxury watch would probably have resulted in better returns. There is potential for long-term value growth, particularly for rare or limited edition models. They also provide personal enjoyment and serve as status symbols. The key is to approach luxury watch investments with realistic expectations and a solid understanding of market dynamics. Buyers should focus on their personal enjoyment of the watch, rather than just potential financial returns, treating any increase in value as a bonus rather than something guaranteed. One of the main things luxury watch investors need to think about is liquidity. Unlike stocks or bonds, watches can't be quickly turned into cash at their market value. Selling a luxury watch sometimes can take a lot of time, and investors might struggle to find buyers who are willing to pay close to the market price. The market for high-end watches is pretty niche, which limits the number of potential buyers. Sellers often have to deal with a 20 to 30% discount when working with gray market dealers, which affects their potential returns. The need for authentication and condition checks can also make the selling process longer. These issues highlight why it's important to see luxury watches as long-term investments instead of quick flips. The luxury watch market can be really volatile, with prices changing based on different factors. Recent trends in the market show this volatility. While some people see luxury watches just as a way to make money, this mindset comes with big risks. The luxury watch community often warns against viewing watches only as financial investments. Not every luxury watch goes up in value. A lot of models lose value or just stay the same price. Making too many of certain models can cause their value to drop. Trend sensitivity. The worth of watches can be greatly affected by changing trends and what collectors like. Luxury watches need regular upkeep to keep their value and work well. These maintenance costs can really affect overall profits. Servicing high-end watches can cost between $500 and over $1,000 every 5 to 10 years. Watches with more complex features might have even higher maintenance expenses. You also need to think about insurance costs and safe storage when calculating the total cost of owning a luxury watch. Sadly, the luxury watch market has a lot of fake products and dishonest sellers. Investors should also keep in mind the tax consequences of investing in luxury watches. According to tax discussions, profits from selling luxury watches could be hit with capital gains tax. This tax can go up to 28% on the profit, depending on where you live and how long you hold the watch. Considering these risks and factors, it's important to have a balanced strategy when investing in luxury watches. The luxury watch market can be thrilling, but it's also complicated for anyone looking to invest in it. These expensive watches often appear to be a smart way to increase your money, but the reality is more complex than it seems. Some watches have significantly increased in value. For instance, the Rolex GMT Master 2 used to cost around $3,000 and is now valued at about $13,000. That's a huge increase over 20 years. Stories like this lead people to believe that luxury watches are always a wise investment. However, that's not always true. The market can also experience major declines. For example, the overall watch market fell by about 40% after hitting its peak in 2022. This indicates that prices can drop just as fast as they can rise. Such fluctuations mean you need to be very cautious and realistic when investing in watches. Simply knowing a popular brand or hearing success stories isn't sufficient. The market is filled with ups and downs that demand more in-depth knowledge and research. One significant challenge is determining how much a watch is genuinely worth. There's no official price guide for all watches, and prices can differ greatly based on the seller, condition, or market trends. This makes it difficult for investors to know if they're getting a fair deal or not. However, while luxury watches can hold value, investing in them isn't as straightforward as it appears. It requires time, research, and a keen eye. The analytics tell one story, but the overall market behavior tells another. What's really going on in the world of luxury watches? The luxury watch market. Luxury watches are crafted through the careful dedication and expertise of master watchmakers who have honed their skills over many generations. Each part, from the hands to the tiniest gears, is created with great precision and attention to detail. Luxury watch brands hire the best artisans who spend countless hours putting together and fine-tuning every piece to make sure it works perfectly. The quality of materials in luxury watches is unparalleled. Precious metals like gold, platinum, and titanium, along with gems like diamonds and sapphires, are chosen not just for their beauty, but also for their strength. Real leather straps, advanced ceramics, and sapphire crystals are just a few examples of the high-quality materials used in these watches. Precision is a key feature of luxury watches. Most of these timepieces operate with mechanical movements, which can either be automatic or require manual winding. Swiss movements are especially valued for their precision and dependability. Moreover, numerous luxury watches include complications like chronographs, perpetual calendars, and moon phases, highlighting the technical skill of their creators. The design of a luxury watch combines beauty and practicality. Each model is thoughtfully designed to be both timeless and stylish, ensuring it serves not just as a timekeeping device, but also as a piece of jewelry to be cherished over time. Collaborations with famous designers and artists give each collection a unique and exclusive flair. Many luxury watch brands boast a rich history and tradition that is evident in every product they create. Brands such as Rolex, Patek Philippe, and Audemars Piguet have dedicated decades, even centuries, to honing their craft and building an unmatched reputation in the watchmaking industry. This heritage adds significant value to their watches, transforming them into true heirlooms to be handed down through generations. Exclusivity is another aspect that makes a luxury watch unique. Many brands offer limited editions, which heightens demand among collectors and enthusiasts. Owning one of these watches not only signifies good taste and distinction, but also serves as an investment that can appreciate in value over time. Despite facing recent obstacles, the luxury watch market is set for ongoing expansion. Forecasts suggest a compound annual growth rate, indicating a promising future for the sector. This growth is anticipated to be fueled by a blend of traditional craftsmanship and state-of-the-art innovation. Technological progress is expected to significantly influence the future of the industry. We are already witnessing this through the incorporation of smartwatch functionalities in luxury watches and the application of advanced materials in their construction. Additionally, 57% of industry leaders intend to introduce NFTs as digital counterparts for certification, reflecting a shift towards blockchain technology for verification and provenance tracking. A major transformation in the luxury watch market is the increasing significance of e-commerce. Online sales are expected to account for 30% of total luxury watch sales by 2030, marking a considerable rise from current figures. This transition to digital platforms is being propelled by younger consumers, with 45% of individuals under 40 more inclined to purchase a watch online. Alongside the rise of e-commerce, the second-hand watch market is poised for significant growth. Predictions indicate that this market could grow from 20 billion Swiss francs to 35 billion Swiss francs by 2030, making up more than half of the primary market. This increase is driven by younger buyers who see luxury watches as investment opportunities and appreciate the sustainability of pre-owned items. To succeed in this changing environment, luxury watch brands must show flexibility and adaptability. They need to adopt e-commerce and digital marketing strategies to connect with younger consumers. As environmental awareness rises, particularly among younger shoppers, brands should prioritize sustainable practices and clear supply chains. Exploring new markets, especially in Asia, will be crucial for growth. China is projected to become the largest luxury watch market, expected to generate $11,120,000 in revenue by 2024. The luxury watch sector has shown impressive resilience despite economic difficulties. However, future success will hinge on brands' ability to effectively manage economic fluctuations. This means keeping pricing power during tough times, controlling inventory to prevent oversupply, and taking advantage of economic upturns to foster innovation and growth. The outlook for the luxury watch market is promising, but it will require a careful mix of tradition and innovation. Brands that can adapt to shifting consumer tastes, utilize new technologies and distribution methods, and uphold their dedication to quality and craftsmanship will be in a strong position to succeed in this fast-changing industry. Just when you think the luxury watch market couldn't face more pressure, tech steps in. Smartwatches are changing the game. Luxury watches face competition with smartwatches. Luxury brands such as Rolex and Omega, along with smartwatches from Apple and Samsung, are driving growth, thanks to advancements in wearable technology. E-commerce growth and an increase in health awareness are also contributing to the rising demand. Traditional watches are now competing with smart devices, which is pushing brands to innovate. Key players in this market include Fossil, Apple, and Citizen. The U.S. watch market, which is valued at $22.77 billion in 2024, is steadily growing and is expected to reach $34 billion by 2033. This growth is driven by the increasing demand for luxury, fashion, and smartwatches, along with improvements in wearable tech. The U.S. watch industry is quite diverse, catering to all types of consumers, from luxury collectors to tech enthusiasts. Brands like Rolex, Omega, and Tag Heuer are still favored for their prestige and craftsmanship in the luxury market. At the same time, the emergence of smartwatches from Apple, Samsung, and Garmin has transformed the industry, incorporating features like fitness tracking and health monitoring. Smartwatches are a major factor in market growth. As wearable technology advances, these gadgets provide features such as mobile connectivity and health monitoring, catering to health-conscious consumers. A national survey from 2024 revealed that over 50 million Americans are using technology for health tracking. In the luxury market, wealthy individuals and collectors are the driving force behind the demand for brands like Rolex, Omega, and Patek Philippe. The allure of unique designs, celebrity endorsements, and limited editions helps to keep the market growing. According to a report from the Swiss Watch Federation in October 2024, there was a 12.6% drop in global sales for the Swiss watch industry, but U.S. imports saw a 2.4% increase, reinforcing the U.S. as an important market. E-commerce growth is changing the landscape of the U.S. watch market. Shoppers are increasingly turning to online platforms such as Amazon and brand-specific websites due to their competitive prices and convenience. Features like virtual try-ons and AI-driven personalization are improving the online shopping experience. Classic watches are now competing with smart devices, which is reducing the market share of analog and quartz watches. To remain relevant, traditional brands must either innovate or emphasize their heritage craftsmanship. Counterfeiting and gray market sales create major problems. These illegal activities harm brand reputation and lead to lost profits. To fight against this, brands are using blockchain and authentication technologies to verify product authenticity and keep exclusive distribution channels intact. The quartz watch market is still strong because of their affordability and accuracy. Brands like Seiko, Citizen, and Casio are at the forefront of this market, providing great value options. Electronic watches also have a dedicated following among sports and fitness fans, with brands like G-Shock and Timex meeting the demand for durability and advanced features. In the realm of men's watches, style and functionality are key factors driving demand. High-end brands such as Rolex lead the luxury segment, while Fossil and Citizen appeal to mid-range consumers, aligning with trends in minimalist and oversized designs. Luxury watches make up a large portion of the U.S. market, fueled by collectors and wealthy buyers. Swiss brands like Patek Philippe and Audemars Piguet continue to dominate this area, supported by investment interest and activities in the secondary market. Convenience stores provide budget-friendly options for practical watches, with brands like Timex and Casio catering to cost-conscious shoppers looking for quick and easy timepieces. The shift to comprehensive online shopping has changed the dynamics of the U.S. watch market. Consumers enjoy the ease of comparing products, exclusive offers, and dependable return policies, making online shopping a key platform for watch purchases. The market includes quartz, electronic, and mechanical watches, available in various price ranges and through different distribution channels such as supermarkets, convenience stores, and online platforms. Major players include Fossil, Apple, and the Swatch Group, which are making significant strides through recent innovations and revenue growth. If you enjoyed this video, like and subscribe, and also click the next video shown on your screen.